finance offices and networks of support and information to trigger a paradigm shift for a sustainable remittances, harvesting and usage climate in Bangladesh. Being a member of the formal force, Mr. Rahman takes special interest in understanding their patterns of remittance flows, their usage and investment behavior, and how the inclusive remittance value chain differs from others. So, Mr. Rahman, could you please open the panel discussion with your statement on both the role of government and the behavioral change of people, migrant workers and their family members in terms of small business investments?
Thank you, Mr. Moderator. Thank you, ladies and gentlemen. A very good morning to all of you. Before I proceed, I would like to thank IFAD for inviting me in GFRID 2018 to share our experiences, and also I'd like to thank organizers and co-hosts for an excellent arrangement of the programs. You'll agree with me that in last 2 days, the temperature in the auditorium and the meeting rooms were a little cold, but the food, tea and coffee in the lobby and the friends around, moving around, were very, very warm. Yeah, so thanks to the organizers. As you already heard, that I am Shafiqur Rahman from Bangladesh, representing Migrant Family Motivation Initiative as the Bangladesh coordinator. I'd also like to thank IFAD for inviting Professor Shahadat Khan from RMIT, who is the global coordinator for this initiative, to speak in another session this afternoon. Ladies and gentlemen, as you already heard, that MFMI, or Migrant Family Motivation Initiative, is an innovative pilot project originally stemmed from an RMIT University research study. RMIT undertook this initiative with Bangladesh government following a bottom-up inclusive governance approach. Ladies and gentlemen, MFMI also aims to involve the Bangladeshi diaspora community in the investment and economic activities of the country. We expect that this process will trigger a paradigm shift in the harvesting of remittance, and also more informed and beneficial usage of the remittances in the rural areas of Bangladesh and other parts of the world. Currently, an MFMI pilot is being run in a smaller scale in 4 districts of Bangladesh. The range of activities that include are identifying the migrant remittance recipient families in a geographic area and preparing a suitable database. And we also nominate an MFMI champion in the area, who usually is a popular people representative who acts as the coordinator and contact person for that geographic area. The team, MFMI team, regularly organize the yearly meetings for very close interaction with the families who receives the remittance. We also organize the mass meetings at the level of sub-district. In Bangladesh, we call it Upajela. It's a significant geographic area where 200 to 300 remittance recipient families, they come together to meet the public officials, financial service providers, and also a network of private and public support organizations. For your information, in each sub-district in our country, there are almost 11 government officials who are otherwise paid by the government for poverty alleviation and the local development issues. So this project involves all these public officials, because the head of the sub-district is one of the MFMI, he works for the MFMI, so automatically other public officials follow him, and they closely interact in these mass meetings. This actually acts as a one-stop service where the migrant family can meet all the public officials, all the financial support providers, and also the network of other supports. In such meetings and interaction, it bridges the information gap which exists between the recipient families, raises their confidence, and also many of their problems are instantly solved. Just to give a very concrete example, an old woman whose son works in South Africa has to travel almost a 4-hour distance to another city, part of the city, to collect the money his son sends through informal channels. But in such meetings, she came to know from one of the financial service providers that that bank has a branch of MTO in South Africa where her son works. So you see this communication, the bridging the gap in the information and the communication instantly solved the problem and saved every month or more frequently a very arduous travel on the part of that woman. The long-term objective of the Migrant Family Motivation Initiative is to develop the required skills and capacities of the remittance recipient families so that they can establish and manage sustainable small agro-based enterprises and businesses in the rural areas. By this means, it will be possible to provide increased employment, diversify income, and also it will lay a basis for the economic prosperity of the returning migrant workers. The project focuses on households that are usually headed by women in rural Bangladesh. Therefore, the project will also empower the women not only by scaling them in small enterprise formation, but also aid their financial inclusion. So as I said, it's still in the pilot stage, run in 4 geographic areas, and we have a plan to scale up this project. For your information, the MFMI conducted an international workshop in Bangladesh in the Prime Minister's office last October, and also the team met our Honorable Prime Minister while she was visiting Australia in Sydney, and received significant guidance from her that how the public officials or already the government system in place can be involved deeply into the activities of this project. So this is a very good example where the private and public partnership could begin through this project. Thank you.
Thanks a lot, Mr. Rahman. I think you have shared a very, very unique case of partnership from a public perspective. Let's shift now to from the public to the more private perspective of these partnership arrangements. And I also want to share a little of the unknown facts about Patrice Kiiru, who's actually the General Manager, Diaspora, Banking and Remittances of the Equity Bank Group in Kenya. Though you have been a banker for almost 15 years, your background is actually in organic chemistry, and you conducted research on how to alleviate lung cancer by removing a special carcinogen found in tobacco. And the research was driven by the idea to allow the people to continue smoking without cancer. I wish you have succeeded with that one. But I think you also play a very important role as a banker. So your group owns banks not only in Kenya, but in 6 countries in East and Central Africa, with a customer base of close to 13 million customers today. So how do you deal with the regulatory differences and inconsistencies, either collectively or individually, to make remittance markets better for your clients, both on the sending and the receiving end? And the second question would be, how do you better take into account people's demand, protection, and empowerment? Over to you, Patrice.
Good morning, guys. So let me, and thanks, Michael. Let me first start by saying that it's quite interesting being in a country that just had general elections. I come from Kenya, for those that don't know, and we had our general elections last year. And for those that may or may not have been following, the guy who lost decided to go ahead and swear himself in anyway. And so that's the idea of democracy. So I think technically we have 2 presidents in Kenya. But in fact, I see a few cameras in the room, and so like the panelist that was here before me, let me say that the views I state here are my own and not my company's or my country's. I see a few Kenyans in the room, so. Let me start by talking a bit about Equity Bank, and then I'll touch on the question. I suppose Michael says, our vision in Equity is to be the champion of the socioeconomic prosperity for the people of Africa, and our dream is to be the largest bank in Africa. Right now, we're the largest in East and Central Africa. We operate out of 6 countries: Kenya, Uganda, Rwanda, Tanzania, DRC, South Sudan. We have about 11 different subsidiaries, 6 banking subsidiaries and 5 non-banking subsidiaries, about 13 million customers. We own a telco. We have about 30,000 banking agents where we serve our customers. So we're very, very active in the East and Central African region. So the question Michael has posed about how we work in 6 different countries and regulatory environments is actually quite interesting. And part of my role in charge of diaspora banking, which is really basically saying how do you bank migrants living abroad, is I have to go to each and every one of the regulators on a very regular basis, usually at least once a month, and help them understand just the importance of the remittance market, but as well as the importance of how you get migrants to invest back home, which is something that we don't necessarily discuss as much, but it's just as important as a remittance market. Some examples of the challenges we face is, I won't name the regulators by name for obvious reasons. In one of the countries, the regulator doesn't really want MTOs to come in because they don't want foreigners to send money to locals, right? So it's this whole idea of we don't know who these people are sending money, why they're sending money to our local citizens, so they shy away from that. So our role is to kind of try to educate them on just why it's important to open up the market. In one of the other countries, dual citizenship is not allowed, and so if a migrant has left the country, they've moved, say, to the U.S., and they, some years later gain U.S. citizenship, then technically they can't own physical assets back home. They can't own real estate because now they're considered a foreigner, and so in any real estate that they own, once they accept U.S. citizenship, then technically the government can come and seize that. So again, very, very, very difficult then for them to even think about investing back home. So they may send some money back home to their loved ones, but they're less likely to invest back home, which then makes their return back home that much more difficult. In another one of the countries, just the process of purchasing real estate is so cumbersome and chaotic that the migrant physically has to travel back home just to complete that process, which then again makes the whole idea of investing back home difficult. So as you can see, very, very different environments, and my role as part of the private sector is to really appeal to these central banks and the Ministry of Foreign Affairs on a very regular basis. And we've even gone as far as coming together with the local banks in the country and forming a diaspora banking association, so then we can appeal to the governments on a collective basis as opposed to individually. The other part of the question that you've asked, Michael, about is quite interesting, especially the piece with people's protection. Now, it's very interesting. You can have a regulation that comes up in one part of the world that has a very, very unintended consequence in another part of the world. And let me give you 2 examples. One is FATCA, which is a U.S. Regulation, and I think the whole idea is identifying U.S. persons that hold deposit accounts abroad. Now, Case in point, you have, let's say, Kenyans living in the US. I, as a financial institution in Kenya, have to report back to the US government any US persons, whether they're citizens or residents, that hold bank accounts with me. So these Kenyans that are living in the US that may or may not be citizens, I actually have to report back to the government. These guys are holding accounts with me. So you can tell it gets very, very dicey because now they assume that they're going to be taxed on this money they're holding in Kenya. And so again, less likely to invest back home. A new one that's just that I think went into effect this month is out of Europe, GDPR, which has to do with data protection, and again, it's likely to affect how then we deal with the migrants living in Europe as a bank, because it dictates how we have to handle their data. So it's even though I'm in the private sector and this is a public sector day, as you can imagine. We're affected quite a bit by the actions of governments, and so we spend a lot of time trying to appeal to them. Thanks, Michael.
Excellent. I think you could continue for the next 2 hours or so. And even it's a public day, but this is all about public-private and the people partnership arrangements. So saying that, coming to my next panelist, Prasun Das. You also have some lesser-known facts. I think you are very visionary people from the very beginning. You wanted to climb the Himalayas when you were 8 years old with your parents. Then you changed your mind. You wanted to become a train driver to see more of the world and the stations where you stopped the people there. At one point as a teenager, you even wanted to become a policeman to make the world a better world and fight against bad people. I think we're very happy that you finally ended up as the Secretary General of the Asia and Pacific Rural and Agricultural Credit Association, APRACA. And I think you have the best overview of what works best in Asia and the Pacific region, both in terms of regulation and supervision and development finance. You know the retail offerings of your membership. You have, APRACA has a membership of all major central banks, development finance institutions, commercial banks, cooperative banks, even nowadays microfinance institutions. So who else could have a better overview than you? So therefore, could you please share a few good practices and lessons learned in impact diaspora investment from a public, private and people's partners view? And where are the challenges and what are the opportunities, please?
Thanks, Michael. Good morning to all of you. Thanks, Pedro, for inviting me for this program. Actually, I'm attending this GFRID for last 5 times, and I've never seen in these dais anybody coming from the commercial banks, and also nobody from the microfinance institution. I represent APRACA, which is Asia Pacific Rural Agriculture Credit Association, which is a 41-year-old association initiated by United Nations long back in 1977. And now, currently we have membership, as Michael has rightly pointed out, 8 categories of financial institutions are our members, including central banks. And most of the, when we talk about regulatory framework, definitely we fall back to engagement with the central banks. We have some experiences which are very interesting, like our engagement with some of the central banks across Asia Pacific. We have created some kind of an ecosystem where even the migrants from the international as well as the domestic migrants. Because here we are mostly talking about the international migrants, but the countries like China, India, Indonesia, which is one of the major countries in terms of population, they have a major population who are migrant in country. And when we talk about financial inclusion and remittances, definitely the in-country remittances help in financial inclusion, which has been proven. We have document from 9 countries where we have seen that in-country remittances have influenced the financial inclusion, which is very important. Now coming to the case examples of from India, after long time engagement with the central banks, and they are basically they are one of the founding members of APRACA, they have now created small banks called payment banks, which are very important, and one of the mandate for those small payment banks are remittances. They are supposed to open the bank accounts of the remittance receiving as well as remittance paying entities who are in country. And the other important thing which we have observed of late in Asia Pacific specifically, that the number of correspondent banking has been reduced, which is a very important case in Nepal. If we consider Nepal as one of the recipient countries, not in terms of amount, but in terms of its impact on the GDP, if we do not have a correspondent bank facility in Nepal, it will be a disaster for the Nepalese who are migrants in other countries. So this is one of the major facts which I want to flag here, is that the correspondent banks, the reduction in number of correspondent banks in Asia has actually impacted the remittance market. And the third issue, which is very important, is that the importance of the microfinance institutions. Now currently we have 19 top microfinance institutions of Asia Pacific as our member, and we found that majority of them are interested to offer some of the services which the financial institutions, the formal, the commercial banks, they don't want to do that. And one of them is the supply of these remittances. So whatever amount, as Davar was telling, that $200 is not a very big amount, but when you multiply it, it will be really very important. We have seen in China that the postal bank, they played a very important role in remittance market in China, the in-country remittance market I'm talking about. So this is equally important market, the in-country market is equally important. In case of China, we just got a report from China Banking Regulatory Commission that in-country market has grown at 4.8%, which is huge in China. In India, it is around 125 billion US dollar, the in-country remittances market. So these are actually very important, and we need to give a lot of importance as a association of all these financial institutions for this remittance market. Then we have examples from Pakistan, that PRI, Pakistan Remittance Initiative, which are very important, where our member central bank played a very important role, and now some of the microfinance institutions like Kushali Bank, they play a very important role in remittance market. And they offer services which are very low cost services. And I think our colleagues from Pakistan, they can help me out in this, in detail about the data. But the data we received from the central bank, the State Bank of Pakistan, that the remittances market has increased by 16% in the last 5 years. Not because the people are going out, but because of the remittances are coming to the formal channel at a very low cost. So the cost is important, but the most important is how our financial institutions are operating in that particular environment. So that's how I see and in last 2 to 3 years, our member institutions are really giving importance, and one of our next general body meeting agenda is on remittances, how to deliver affordable and accessible remittances, both in country as well as foreign remittances. Thank you.
Thank you, President. You still missed the point of the inclusive remittances value chain, and this would have led to the people's investments of their remittances. But perhaps we come back at a later stage. Not now, not now. Over to you, Jaspreet Singh. As you can see, Jaspreet is a regional technical specialist of the United Nations Capital Development Fund, Asia. And while you work on solving the problem across the region in the financial inclusion space, and we got an idea yesterday in a very interesting forum hosted by UNCDF in the afternoon. So financial inclusion through the digital technology innovations, and we all believe that this is a very good enabler. You shared something with me, and that is that every now and then that you switch, you switch off your gadgets, you said, for yourself.